Hi, Jonathan York, Bear Financial Partners, looking at investment markets. Pretty stellar month in November for US equities. The Dow and S&P were up around 8%, Nasdaq was up just under 10%. And indeed, the Dow's at a new high for 2023. So now it's just going to be interesting to see if this rally continues into the year end. Now that's really all on the back of the sort of analysts coming out now and believing that the Fed is sort of done now on interest rates. Sort of 5.25%, 5.5% is the peak, and with inflation looking like it's falling as well, that may well appear to be the case. Although obviously the Fed is still talking tough on inflation and saying, data dependent and, still a possibility of increasing rates if needed. But if you take the view that that is the peak, then obviously then talk starts to turn about when the Fed will start to cut interest rates, bearing in mind they paused in July of this year. And certainly the market is pricing in sort of a cut between sort of March and June as around sort of 80-85% probability. Now that's obviously those longer term rates sort of fall 10 years back to 422, 2 years back to 454. So those rates have fallen around 3/4 of a percentage point over the last sort of 3 to 4 weeks. Now, what is helping as well on the inflation front is that the employment data is getting a little bit softer out there. There's not quite as many jobs, sort of vacancies out there. That's fallen a little bit. But also as well, the actual number of people who are finding employment is sort of falling a little bit as well. So with some of the heat coming out of the labour market, that helps on the inflation front as well. Obviously, geopolitical pressure is still out there. The Israeli-Hamas war has sort of heated up again, and that's sort of in full-blown conflict again now after the sort of temporary ceasefire. But also as well, rumbling away still the Russian-Ukraine war. That's approaching sort of 22 months now. Now, the latest OPEC Plus meeting, they agreed to keep the production cuts in place for the first quarter of 2024. But so far, it's having pretty limited impact on the price of oil. If anything, oil is a little bit weaker. It's trading around sort of $72 and change now. And, that's obviously quite a way down from the sort of mid-80s it was trading at 3 to 4 weeks ago. Now, in the UK, just been hit by a really pretty severe sort of cold snap for winter, the first of the sort of winter months. It's just going to be interesting to see how the certainly the energy costs sort of hold up over this period. But again, the UK economy has proved pretty resilient out there. Certainly nowhere near the sort of deep sort of recession or depression that people were talking about sort of 12 months ago. Now, likewise in Europe as well, and certainly the European inflation numbers, really pretty impressive. They're down to around sort of 2.5% or around that sort of level for the European members. Which is pretty impressive and certainly helps the ECB. Now, while there's no talk about ECB cutting rates yet, it's certainly pretty healthy on the inflation front. Now in Australia, the Reserve Bank meets in December, but expectedly rates on hold. But certainly February potentially is a live meeting, given that inflation has just nudged up just a fraction. But with global inflation sort of falling, and certainly the fall in oil prices as well, potentially those inflation numbers over the next sort of couple of months for Australia will be pretty positive out there. And potentially we're seeing the peak of rates in Australia. In which case the cash rate at 4.35, then again the sort of talk will then start to turn around to when are they going to start to cut. In which case the cash rate at 4.35, then again the sort of talk will then start to turn around to when are they going to start to cut. But certainly migration numbers in Australia are really pretty positive out there, and running into hundreds of thousands. So that's going to keep the economy on the boil for certainly for most of 2024. Now here in New Zealand, the new government was finally sworn in yesterday, but that came with a sort of a heap of protests out there, and this is going to be very interesting to see how the first sort of 100 days sort of play out. Because the new finance minister, Nicola Willis, has now had a reasonably good look at the books, and they are in much worse state than first anticipated. It looks as though Grant Robertson and the previous government kept a pretty good sort of smoke and mirrors out there to sort of try and disguise some of the issues that could be coming forward over the next sort of 12 months. But there isn't any budget plan for December the 20th, so it'll just be very interesting to see what comes out of that. The new government is still sort of steadfast on its commitment for lower taxes. But certainly New Zealand will be looking for a pretty good summer out there, and with plenty of tourists coming through and spending plenty of dollars out there to sort of help keep the economy sort of moving along. And certainly the weather forecast looks like it could be a good long hot summer. Which would be good for the New Zealand economy. Now, if you're looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and I look forward to speaking to you soon.